That's full of bitches.
Hey everybody, we will get started in just a moment. We'll do a quick audio check. Let me know if the audio is working and also the visuals. We should be streaming in 1080p, so just give me a thumbs up in the chat if that is what you see, and then we'll get started in just a moment. Alright, it looks like we are good to go. So good evening everybody and welcome back to Walks and Wall Street. Today is November 27th, 2023, and it's about 8:59 p.m., pretty much 9 o'clock here in Midtown Manhattan. Now we are reporting live from right outside of the GM building. Right in front of us you have the beautiful Plaza Hotel. Look at how amazing that looks. 10 out of 10. And to the right, we also have the flagship Apple store, which is open 24/7, 365. And then if we go a little bit further over to the right, that is the iconic and the very famous Sherry Netherland Hotel. But hopefully everybody had a wonderful holiday weekend. Hopefully everybody had a fantastic Thanksgiving with your family and your friends. Now it's time to get back to reality, jump into the swing of things, and hit it hard for the last week of November. Yeah, it is the last week of November, which is kind of wild to think about. Next week will be December. Last month of the year. Q4 is coming to a close. And that means we will, in the streams ahead, we'll be doing some planning for Q1 2024. Now, usually corporations start their, 2024 next fiscal year planning in October. But I think it's important, for everybody who's watching the stream, start to think about what you're going to do, what your goals are, what your aspirations are for 2024. I think we should be getting that together now. I think that's most appropriate. But as we know, last week was a very shortened trading week on Wall Street. The market was closed on Thursday for Thanksgiving, and then on Friday we had a shortened trading day. Markets closed at about 1 o'clock. Now, markets open today, we were about flat the entire day. But I want to talk about something very, very important, and this is something we actually wrote about in this week's Behind the Street newsletter. I want to turn everybody's attention to gold here for just a moment. Now, gold is trading at $2,014. So we're back over $2,000 an ounce for gold. And if you pull this up on your Bloomberg Terminal, TradingView, or MarketSmith, I want you to go ahead and zoom out to a monthly time frame. Okay? And what you'll see is something very, very important that I think we should all be paying attention to. Now, go all the way back to August of 2011. Okay, that is when gold put in its top at about $1,914. And ever since, we've been going sideways. We bottomed in November of 2015. Then from November of 2015 all the way up to August of 2020, right into the pandemic, we've been rallying and building out the right side of a cup base. Now, fast forward 2 years, right, from August 2020 to October 2023, so almost 3 years here, we've been working on the handle in that cup base. You know what, let me actually I think it would be probably easier for me to just show you. Let me see. Let me know if that's clear. Can you guys see that? So we had a clear top in 2011. We bottomed in 2015, rallied all the way into 2020, and now we've been going through this 3-year consolidation. If we break out over the swing highs, which I think we may do here in gold, the measured move on that is significantly higher prices. Significantly higher. And gold tends to do that, by the way. Let me actually zoom out even more just to quickly show you a visual. This is how gold trades, and I want to go all the way back to 1972. So gold rallied, right, coming out of that bear market in 1976 all the way up to the highs in 1980, where gold put in a top, consolidated all the way to 2006, and then broke out and went on that ride all the way up to September of 2011. You see this? So gold tends to do that. It tends to go on these massive rocket rides and then consolidates for decades at a time. And then when it breaks out, it's just off to the races, and the measured move is pretty significant there. So I think we should all be paying attention to that. Specifically as, geopolitical risks are heightening, and all that. So I just wanted to bring that to your attention. We did write about that in the Behind the Street newsletter as well. But tonight we are going to be talking about new home sales. Okay, we got new home sales data out, and for the month of October, new home sales declined by about 5.6%, coming in at 679,000 versus the 725,000 that was expected by analysts. Now, prices also came down. Okay, the median sales price for new homes in October declined all the way to $409,300 from $422,300, right? It's down 17.6% year over year. And we've been talking about this. Obviously, we've also been writing about this in the newsletter. Real estate is the least liquid asset class, right? So equities or stocks tend to reprice the fastest for a rising interest rate environment. And that's why we saw that massive price correction in 2021 to 2022 as the Federal Reserve started to raise interest rates, right? But it takes about 12 to 16 months for interest rates to work its way through the economy and start to have a material impact on the real estate market. And we're just starting to see that, which I think is a good thing, okay? Reason number one why that's a good thing. If everybody just types !news, NEWS in the chat, it's going to bring you, not news, excuse me, !CPI. !CPI in the chat. It's going to bring you to the Bureau of Labor Statistics Consumer Price Index report. And what you'll notice about that is there's a huge lagged effect in shelter costs. Now, the Federal Reserve has a dual mandate. One of the parts of the dual mandate is to have inflation come back down to that 2% target. And number two is maximum employment. Now, as we know, shelter accounts for about 40% of CPI. So if we don't get shelter costs down, which slowly but surely they're going down, there's no chance that CPI is going to get down to that 2% target. But with the data that's coming out, I'm confident that shelter is going to continue to decline. So if you click that link, it'll look something like this. So this is the shelter category. And as you notice, we're just starting to roll over right here. It's been about 7 consecutive months of decline for shelter costs. I think that's going to continue. I think that's going to put additional pressure on inflation to the downside. And guys, good news. Housing is going to get cheaper for Americans. This is what we want, right? I think, in my opinion, and let me know if I'm wrong. Please type in the chat if I'm wrong, you disagree. It's not sustainable and it's not healthy for a middle class, a functioning middle class, if an entry-level home is over $500,000. Okay? I mean, I don't think that's sustainable. I don't think anybody wants that. We've talked about the data. The number one way a first-generation millionaire, okay, becomes a millionaire means they didn't inherit their wealth, they didn't get it from mommy and daddy, they didn't get it from, inheritance or winning the lottery, building wealth on their own. The vast majority of that first $1 million comes from equity in your home, right? Comes from the equity in your house. So if we continue to have runaway home prices forever and an entry-level home is $600,000, well, then nobody's really going to be able to afford to buy a home, and the middle class is not going to be able to build wealth. So this is a good thing. This is normal to happen in a business cycle. We're starting to see housing prices come down, and I think that trend is going to continue for the foreseeable future. All right. I'm going to go ahead and close up the laptop here, everybody. I'm going to say hello to everybody in the chat. But just one quick reminder and announcement before we get started. This past Friday, okay, so obviously Thursday was Thanksgiving. So I sent out our free investing newsletter, the Behind the Street newsletter. I sent it out to everybody on Friday. There's a ton of amazing nuggets of information there that I think you guys are going to enjoy. So if you haven't received the Behind the Street newsletter yet and you want to sign up for free, you could scan the QR code on your screen or type !news, NEWS in the chat, and the Nightbot will drop the link to our free Substack, and you're going to get all of our equity research and market analysis for free, sent every other Thursday to your inbox. And at the very end, we give interesting property tours. So at the very end of the newsletter, if you scan the QR code, we gave a behind-the-scenes, all-access penthouse tour of 75 First Avenue, the penthouse 8A. Let me know what you guys think. So I'm going to go ahead and close up my laptop. We'll say hello to everybody in the chat, and then we'll get into some of this housing data. All right. Okay, let me go ahead and clip this on. The microphone, that is. And we will be on our way. Everybody, we are now reporting live right here from 59th Street, Central Park South, right outside of the GM building. You can see the flagship Apple store right here. And let's be on our way. I think I want to go all the way downtown tonight. We do spend a lot of time up in Midtown, but I've been working crazy hours, hopefully getting deals done. So, Wendy England, I see Junior, Robert is here, Steph UF, what is going on? I see George Edison, Air is here. TC, what's up? This is a great newsletter, thank you. Thank you for reading it. Rick Allen, Tatted Tara, Stephanie Stearns, good to see you. Andre Lima, Rick Allen, what's up? It says 500K isn't, 500K is reasonable for a condo in a huge city like New York City or Toronto. Yeah, I agree. 500. Now let me clarify, because I think that's a good catch there. I'm glad that you made that comment. So yes, in a big city like New York or Toronto, okay, $500,000 for a home is not a bad price, but for 500K, you're probably going to get a studio apartment that's less than 500 square feet, right? I'm generally talking about, oh, I almost stepped on this pigeon. That would have been a first. I don't know what I was saying. Pigeon distracted me. That's all right. Oh, I was saying, yeah, I mean, less than 500 square foot, little box in New York City, yeah, you could probably buy that for 500K. But I'm talking about like a regular home, right? Like a single family home, 3-bedroom, 2-bathroom starter home in a lot of submarkets, right, on the outskirts of New York City and the like. Pretty expensive. I mean, go to a suburb like Long Island, New York, and you're going to pay $650,000 for an entry level, in a neighborhood where it's going to be safe. So, but yeah, you're 100% right. But the good news is that prices are coming down, so it's very good. Lionel says, hey Tom, this is Lionel from Melbourne here. Just subscribe, love the walks. Where's the donate button? You need a beanie to go with the new coat. Oh, no worries, dude. We just do this for fun. I do appreciate your offered donations, but you do not need to. But thank you so much for the support, and we appreciate you being here. First and foremost, we'll make a loop around the block, and then we'll head down. I see Lena Sandoval is here. What's up, Lori Jr.? Good to see you. Donkey's here. Now, everybody, I'll quickly just explain this building, which is in a prime location, by the way. So, number one, you have the Plaza Hotel. Then you have the GM building. You have the Sherry Netherland right here. But this building is 5 East 59th Street. You see it? Now, this is commercial building. It has 2 retail spaces on the bottom, and then it has 8 office units on top. Now, this, I believe, is going into foreclosure auction. There was originally about $85 million worth of bad debt on that building, and I think it's down to like $25 million is the bid on it. I think. You could look it up for yourself if you type in the address 5 East 59th Street. But one of the reasons why I wanted to point this out is because we've been talking about this a lot, particularly commercial real estate office in Manhattan. There's a lot of vacancy, and this whole unit is totally vacant. There's not one tenant in there. And this is just one of many in the city. if you remember yesterday's live stream, we started the stream at 34th Street, Penn Station, okay? And right on the corner, right across the street, I should say, from that very famous hotel, the New Yorker Hotel, there's a big commercial building that's not even built yet, and I think it just recently sold at auction for 15 million bucks. You know, and that's something that's not even complete. So, you know, as we see this trend of higher interest rates staying here higher for longer, it's going to start to put increasing amounts of pressure on commercial operators, and prices are going to come down, and the business cycle will reset yet again. But we're making a right now on Madison Avenue. You see a pretty good view all the way at the end of One Vanderbilt, which is pretty cool. Dan H., good to see you. Mary says, I feel housing might come down some, but home loans will be harder to get, and much higher taxes, HOA fees, and insurance will still keep many from buying unless one is very wealthy. That's a great comment, actually, Mary. I agree with you 100%. You know, a lot of the deals and a lot of the transactions we're seeing here in Manhattan have been cash, right? And cash buyers have the power because they can negotiate, particularly with new builds, right? So the main topic for tonight's stream was we got new home sales data out, right? Now, even though new home sales fell, I believe that you're more likely to get a better deal, right? Like a real deal on new development as opposed to resales in this market. Mainly because the vast majority of people who own homes right now, well, they have interest rates well below 4%. So there's really no incentive and really no motivation for them to move, right? But if you're a developer or you are a single family home builder and you have tons of inventory on the books that you need to move, well, they're more likely to negotiate, they're more likely to cut their prices, and they're more likely to do creative things like buy down, you know, points on your mortgage. So I think you're 100% right. Hey, William is here, says I am subscribed. Thank you so much for subscribing to Walks on Wall Street. We're happy to have you here. We see Gary Carpenter, LA007. What's up? Junior says, Tom, any thoughts on Amazon selling cars in 2024? Big plus for the big three automakers? Yeah, I mean, I heard that. I just don't know how they're going to do it logistically. Like, are they going to build out physical infrastructure? Are they going to build out sort of a separate arm of the business? I just don't know. Now, if anybody could do it successfully, it's Amazon, right? But, you know, let's get some names in the chat of some of the main, online vehicle, companies. What is one of them? Carvana, I think, was one big one that was going crazy during the pandemic. I think they're in some financial trouble now, but yeah, I mean, look, I think the future of everything is online, right? And a more frictionless transaction. That's what I believe. I think the future of most sales is online, and it'll create for a more frictionless transaction. But then again, I'm not an expert in auto sales. I guess I'll ask you guys in the chat, would anybody in the chat be open to purchasing a vehicle solely online, 100% online? These horses are beautiful here. Donkey says the way they have always done it, they mail them to you. Vinny says car dealer model is ripe for disintermediation. Zach Drew, what's up? Yeah, Jeff W277 says Carvana. Yeah, I don't know. I mean, isn't that the Robert says can't negotiate online? Maybe. Casey says, yes, I want a Tesla. Well, Tesla's business model is all online sales, right? I don't even think they can physically do, I don't think they can do dealership sales or something. What was going on with that? I don't know. I don't have a car. I've never bought a car, actually. So I'm not probably the best to give my take. I'm actually more interested to see what you guys think, to be honest. DC322 says, Tom, Carvana had lots of problems with its title and mechanical problems with the cars. You know what else, though, I will say that has, well, allegedly a lot of problems? Has anybody bought a vehicle here before from Enterprise Car Sales or Hertz Car Sales? Now, for those of you who don't know, those are the rental car companies, right? We'll just check out these Christmas lights because I think they look beautiful. These candy canes here. Now, Enterprise is the rent-a-car company, right? But they also have an auto sales division. And when I was a teenager, okay, I used to work at a rental car company, which was Enterprise. And I see how the customers treat the cars. And I'll just say this. I would personally never want to buy a vehicle that used to be a rental car, particularly in Manhattan, okay? I have some horror stories for you guys that I won't tell, but yeah. EUG says, I would never buy a rental car. They are abused so much. Yes, they are, my friend. Yes, they are. I don't know, has anybody ever bought from a rental car company? Code Blue says, Tom, Tesla has a showroom of some kind on Route 22 in Springfield, New Jersey. I think they also have a center in Red Hook, Brooklyn, too. Brad's Brain says, I bought 2 cars essentially online through CarMax. Granted, I went and test drove them both, but the decision was made prior to that, and I very much prefer it. Huh. Nice. This is the shops at the plaza. But yeah, it looks like we're about 50-50 split in the chat. Some people are like, no, I would never buy a vehicle online. Some people are like, yes, I would. If anybody's going to be extremely successful at it, it's going to be Amazon. They have the infrastructure down pat. Hey, Daryl is here from Chicago, Illinois. What's up? Oh, Tucson says, Tom, I bought a Jeep Cherokee from Enterprise years ago and it had engine problems. Would never buy from a rental company ever again. Yeah, I mean, you know, a lot of people don't necessarily know that, but I think if you know someone who's worked for a rental car company before, you know, people are not, generally speaking, right? I don't want to, you know, say everybody, but generally speaking, people do not treat rental cars as their own. I think that's fair to say. Is that fair to say? Most people, if they're going to rent a car, they're not going to cherish it and, you know, make sure they're not destroying the car as if they actually owned it. Particularly in a big city, by the way, where, you know, I've seen some crazy stuff. Because a lot of New Yorkers don't drive. Most New Yorkers don't own a car. So when they rent a car, they haven't driven in a while. They're scratching it up, they're dinging it up. And, you know, we even had a big to-do where NYPD detectives had to come in and put like a sting operation going on because apparently, right, allegedly, this was years ago, there were individuals renting vehicles from us. They would rent the vehicles. Apparently, they would drive them to the Bronx or Queens. They would flip out all the parts and take out off all the brand new tires, and they would resell those parts overseas. And sometimes they would just take the whole car and ship it to China. It was just wild. So you never know. And it's hard for just a regular Enterprise rent-a-car employee to spot that, right? So they'll just swap out the parts and, you know, you never even know. So again, not everybody. I want to make sure that I get emails sometimes, you know, people getting upset. I know this is like very bizarre occasions, but it does happen. Anyway, 5th Avenue, Louis Vuitton store here. Decorated beautifully for Christmas. And we're also right outside of the Bergdorf Goodman. EUG says we call those chop shops. Oh yeah, I think I heard that term before. I think you're right. Jeff W277 says rental cars are expensive. You don't get a rental car unless you really need it. Once you make the decision to rent a car, you are going to get your money's worth. Yeah, and a lot of people, a lot of the business that we did, Jeff, and I'm just trying to remember this from way back, it was people who have unfortunately gotten into accidents and their insurance is paying for a replacement car. Like, that's a lot of the business we did. But, even still. All right, let's head all the way down Fifth Avenue tonight. I want to try to go to the Village. And some good news. Oh, I almost forgot to tell you guys. We have some good news. The good news is the following. They have officially put up the Christmas tree on Wall Street. And they're going to be doing the tree lighting ceremony on November 30th, which I'm looking forward to. Now, I haven't decided if we're going to stream that. If I'm available and I can do it and I'm not working, I think that would be cool to do. Stream the tree lighting ceremony outside the New York Stock Exchange. But as of recording this video, if you go down to Wall Street, Broad Street rather, outside of the New York Stock Exchange, the tree is there. So pretty cool. Hey, Zachary's here. What's up? Roz999 says, I have heard of illegal engine swaps in some of the vehicles. Yeah, I mean, all types of crazy stuff happens. It's wild. Zachary says, are you going to see Rockefeller, the tree lighting? Honestly, Zach, probably not. I'm probably not going to go to that tree lighting. Mainly because that is crazy, okay? Like, there are thousands of people who attend that, and I don't really like big crowds all that much. There's just too many people there. I'll see it after they light it, right? Like a couple days after they light it, I'll go for sure, but I don't know if I'll be there on the Christmas tree lighting day. This is Trump Tower right here. So you have the main Trump Tower, and then right off to the right, you have 432 Park Avenue, which is that Harry MacLeod building. Hey, Sally's here. What's up, Sally? I see Robert. Oh, John Kelly says the annual Rockefeller tree lighting is Wednesday night. Oh, so it's a day before. What's the exact date of Wednesday? I think Thursday is the 30th, so I don't know. Regardless, I think the city's going to look very nice once the Rockefeller Center Christmas tree is all lit up and Wall Street, and we'll do our annual compare. So maybe what we'll do, the 30th will be down in Lower Manhattan. We'll check out Wall Street, and then the 31st we'll head back uptown to Rockefeller Center, and we could take a poll in the chat. Which Christmas tree do we like the best? I think you all know my answer. This is the Peninsula Hotel. It's always lit up fantastic for the holidays. Hey, Austin City Limits is here. Tropical Days. Says, to be honest, it's not really that great. They record a lot of music acts day in advance, so you just get to stand there most of the time. Yeah, and it's very crowded. I'm not too big of a fan of the crowds, but I will probably be at the Wall Street one. So again, you have the Peninsula Hotel off to your right. Across the street, this is the St. Regis. Gorgeous facade of the hotel. But right next to it, this is actually a new development, by the way. So there's retail on the bottom, but look at the top. I think those are residential condo units all the way at the top, those 4 units over there. I'm going to do a little bit of research and see if I can get us up there and do a little bit of a walk around or a tour, but I believe they are condos. And everything else may be office. It's probably 2 retail spaces, 1, 2, 3, 4, 5, 6, 7 office, and then the developer probably got some sort of zoning right to build 4 condos on top. which is kind of cool. I mean, to be able to say you live right next door to not only the St. Regis, but also the peninsula. And I almost forgot to show you guys. This is the University Club. This is an exclusive and very prestigious club in New York City. Look at the crown moldings on the ceiling. It's really incredible in there. If we walk just a little bit further down and we'll bang a right on 54th Street, you'll be able to see what I mean. So the University Club sits right on the corner of 5th Avenue and West 54th Street. Now, the interior is just really unbelievable. It's kind of like a mix between the New York Public Library, Stephen Schwarzman building, and the Morgan Library. If anybody's ever been to those two places in the city, very similar design, very similar architecture. I think we'll be able to see a little bit more if we just go a little bit further back. I mean, look at that. What do you guys think? I mean, that's really, really stunning there. All right, we'll continue down. You know, maybe we'll actually wait and I'll take you guys past the Jeffrey building. Jeffrey's is a very big Wall Street investment bank. Hey, Christian Coleman says, Tom, what are your thoughts on Austin, Texas, and where do you think it ranks against some of the up-and-coming cities for tech talent? Yeah, I mean, Austin is a nice city. I've been to Austin once. Did I love it? No, it's not for me. I need to be on the East Coast and I need to be by the water, right? I need to be by the ocean. Now, generally, here's my synopsis with Austin. Yes, there's a lot of tech talent there, but do I ever think it'll be able to compete with the likes of San Francisco and New York City? Not on the same level, I don't. And I'll tell you the reason why. The reason why New York City, you know, and obviously you could say whatever you want to say about it, and I know I'm coming off as I'm very biased because I live here and I do a live stream here and I sell New York City real estate. So keep that in mind when I'm talking about this. But generally speaking, big tech, Wall Street, right, and consulting, those big industries that drive a lot of the economic growth, they want to be very strategically located to schools on the Northeast in close proximity to New York City, close proximity to Boston and the like. You pretty much have the whole Ivy League here, right? Now, if you go out towards Silicon Valley and San Francisco, you also have very prestigious, what they call feeder schools into, from top universities into these big companies. So companies try to strategically locate themselves where the talent is, right? And the top talent, by and large, comes from the top schools in the United States. We'll just give an example about New York City, right? New York City, you have Columbia University, you have NYU, a little bit further upstate New York, you have Cornell, right? All up and down the East Coast, you have the Ivy League. So I think you'll always have high demand for businesses and top tech talent on those coastal elites, generally speaking. I think cities like Austin, Denver, Colorado, I should say some of the newer tech cities, will be a little bit more volatile, I should say. But they're great cities, right? There's definitely going to be competition there. But I think you'll always have the anchors in those two sort of parts, if you will. Hey, OG, what's up? Juan Fernandez says, Ken Griffin says Miami is the next financial hub of the world. Yeah, he's definitely said that. Let's see if he's right. You know, South Florida in general has really boomed over the last few years, and you're actually starting to see big job growth down there. And some very lucrative jobs as well. This is the Jeffries building right on the corner of Madison. We'll go back around and head down, try to get away from some of the construction noise. Hey, Douglas is Nashville is another rising tech city. That's true. And I like Nashville, Tennessee. Nashville's a nice city. Very fun city, too. Visiting Vanderbilt University. Very, very fun city. Miami, Florida, Fort Lauderdale, right, South Florida in general, has always been very, very attractive to people. But where it fell short is competition based upon salary, right? The salary gap, you can make a lot more money in New York City than you can in Miami. Oh, we're buffering. Let's go around. We'll go around here. We'll try to cross to get away from some of the buffering tonight. Hey, JC, what's up? All right, I think we should be good now. There's a lot of construction, so maybe that's why. Hey, Carla says I live in downtown Seattle. Facebook, Amazon, Microsoft, and Google have very big campuses here. Yeah, that's true too. All right, how is the buffering situation now? Are we good? Hey, David Sommers, what's up? Welcome to New York City's Fifth Avenue. We are here outside of the Cartier store. Troy Atman says, I hear Bezos is buying more space for Amazon in Miami. Yeah, they are. And, you know, what I was saying is historically the main drawdown or drawback with Miami and South Florida has been the pay, right? You can make a lot more money out of college in a major city like New York or San Francisco as opposed to Miami, Florida. But that's changing in a big way, right? There's a lot of very lucrative finance jobs down there, private equity, venture capital, and even tech jobs where the salaries are quite competitive now, right? And that never used to be like that before. I did interviews when I was coming out of school down in Miami, and the salaries were at least a $20,000 to $30,000 difference, at least, right? But now that you have, you know, Citadel Securities down there, you're having pretty much all of the major hedge funds establishing an office down there in Palm Beach. The salaries are getting competitive. And I think that once the salaries are on parity or on par with New York City, then it's gonna get interesting, right? Because let's say if you're a first-year investment banker coming out of college, right? Your OTE or your on-target earnings is an, you know, entry-level analyst, right? Is maybe 110, 120,000. If you can get that same exact compensation structure in Miami with the same exact career trajectory, I think a lot of people would choose Miami maybe over New York, right? I don't know, but it all comes down to the salary, I think. EUG says, but don't New York taxes take a big chunk out of that salary? Yes, it does, but like you got to think about the bigger picture. So here's how I think about it and I interpret it, right? Now, I've pretty much worked in New York City all of my adult working life, and I've paid ridiculous taxes, right? Disgusting high taxes. But here's the trade-off. I've been able to grow up and build my career around the smartest people, not only in the United States, but the entire world, right? The competition and the people that live, work, play, whatever, in New York City, like this is the NFL of the business world. So it's sort of like you got to pay to play. So I don't mind paying the ridiculous high taxes if that means I'm around the right people to grow my career and build an amazing network, right? I would much rather make a $100,000 salary, right? Just giving an example, in New York City, where I'm paying 50% of that, right? I'm being a little bit, over exaggerating, but where you're giving about 50% of that away to taxes and then you're paying crazy rent, and build a ridiculous network, then make $100,000 totally remote, where I just sit inside all day and I don't have the ability to grow a big network. At least that's sort of the way I think about it, because as you get older, I think, at least in my perspective and opinion, it's really more important that you build a solid network of people that you know, people that you trust, and people that are willing to do big deals, right? So, is that worth the higher taxes? I say yes, but to a point, right? Once services start to decline and once, the politics get out of control, then you kind of got to put the city in check. But I have no problem paying the high taxes if the services are great, if the city is safe, things like that. That's sort of my perspective on it. I don't know, what do you guys think? Agree, disagree? Mike C says pay to play is a great description. Stephen Bates says, don't you pay your taxes, Tom? Oh, don't pay your taxes, stand your ground and tell the tax man where to go. Yeah, I wish. I'd probably be in jail. Hey, Zozo Bob says Miami was never a corporate city like Atlanta, Dallas, or Houston. Maybe that'll change, Zozo Bob, who knows? Maybe we'll be on the ground floor of that transformation. OG says, how does the quality of life in New York City compare to cities like Sydney, Moscow, Beijing, Bangkok, or Taipei? I can't answer that truthfully because I've never been to any of those other cities. But anybody in the chat, feel free to comment on that. I've just never been to those cities. Tony says, Miami is not a real city to live in. You go down there when it's cold for a long weekend, but a real life and real city, no place will beat New York. Sure, it's expensive, but it's the price of admission. I respectfully disagree with that. I have a place in Miami, and if I could, like if money was not an issue, I would be there right now. I'd be at my house right now. It's an amazing place to live. The quality of life is unbelievable. Look, I love both. I love New York City, I love Miami. These are the two places where I want to be. But Miami is a very, very real city, and it's awesome. It's awesome to be there. If you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. This is the Saks Fifth Avenue light display. Let's watch this again, might as well. right, let's continue to head down. I never get tired of that thing. I feel like last year I got tired of the display like after 2 days. All right, let's cross the other side of Fifth Avenue and we will head down. All right, we're gonna cross by Saks Fifth Avenue now. Hey, Cat Bravo, no problem. These are all the windows outside of Saks Fifth Avenue. I don't think we've seen these ones. I think it was too busy the other days. Hey, Hawaii, what's up? Good to see you. Hope you're doing well. This one's cool. You know what, maybe we'll try to head over to the Hudson Yards tonight. We have yet to see that Christmas display. It's been just too windy. But across the street, this is the main Christmas tree at Rockefeller Center. So this is going to be lit up in a couple days here. This is going to be the best view of the Christmas tree. And I think they're going to close down Fifth Avenue for a few weekends in December. So the entire avenue will be able to be just all pedestrians, which I think is a really good idea. Hey, Emil Carr, what's up? One. Ooh, they lit up, they put a light on the Christmas tree. Let's zoom in on that. So there it is. That is the Rockefeller Center Christmas tree that will be lit up a little bit later this week. Looks good. Hey, Susan Wolin is here. What's up? Good to see you. Joe, this is Tom. Have you ever walked the Brooklyn Bridge on the stream? Oh my God, we've probably done like 7 full marathons on the Brooklyn Bridge on the stream. Now here's a miniature model of the Christmas tree at Rockefeller Center in the window here. Man, actually this one may be my favorite. This one's the Manhattan Bridge. You have the Manhattan Bridge and the Empire State Building. Man, that one looks incredible. All of them really look incredible. Joe, maybe we'll walk it tomorrow because I have to be in Brooklyn for a showing anyway. Which one's your favorite? I think that one was my favorite. Hey, DJ reviewing under 2. What's up, man? Good to see you. Thanks for joining us. Let's head downtown, though, to the Village. All right, we'll watch this go around one more time since we're here. All right, that's our limit for the year. Well, for the for the next week. All right, let's head down towards the Diamond District, and then hopefully we'll be able to make it to the Hudson Yards. Because I don't think we've been inside the Hudson Yards yet, or the shops at Hudson Yards this holiday season. I don't think we have. This weekend, though, this whole Fifth Avenue is going to be so busy. It's going to be crazy. Hey, 1776 is here. Good to see you. Thank you for joining us. Greg Miller. What's up? Troy Atman. Welcome. Wow, look at this. Love the architecture on this building here. Look at that. Look at those stained glass windows. And you see 270 Park Avenue in the back too, and it's awesome. Hey, Lugo is here. Good evening. What's up? Hey, Cat Bravo. Glad you're enjoying it. Oh, you know what I read? I was going to tell you guys this. So, remember I made that prediction that I said this Thanksgiving holiday would break a record for the most traveled Thanksgiving ever in American history? So the day after Thanksgiving, so I guess it was kind of true, or I guess that prediction kind of came true. November 26th, which I think was what? The day after Thanksgiving? That was the most traveled day in American history. I forget the exact number of flights, but you could look it up. I read it I got a notification on Bloomberg. Now, supposedly there was more flights ever in history on that day, November 26th, which is kind of crazy, right? And it's sort of like a narrative buster. Oh, real quick, this is the Diamond District. You could always tell you're in the Diamond District when you have these diamond-looking street lamps. You have one here, you have two down there, and then you have one behind me. But yeah, it's sort of like a narrative breaker because you have sentiment pretty much at all-time lows. Everybody is so pessimistic on the economy. Everybody is so pessimistic on the outlook and the future of America, but every single, sort of piece of data that's been coming in has been looking pretty, well, there's a lot of interpretation, but, Black Friday sales was up 7.5% year over year. Black Friday online sales came in at $9.7 billion, an all-time record high. And then the November 26th was the most traveled day in history. So people are out traveling, visiting family, friends, taking vacations, spending money, right? Buying things online. And that really flies in the face of the narrative, right? And what sort of people perceive. It's very, very strange. Very, very interesting. Hey, Joe, says good evening, Tom and team. What's up? Good to see you. I don't know, what do you guys make of that? Right, we sort of talked about this last night on the stream, that I think people are just consuming so much negativity that they have a negative outlook on life. I don't know. I really don't know what the answer is. It definitely has something to do with human psychology. 456 Tom, have you read the article in Curbed about how people are regretting buying units in the plaza? I have not. But I mean, people regret buying units in pretty much almost every building in New York City, right? There's at least going to be one disgruntled buyer about something. I mean, just look at 432 Park Avenue. I mean, almost every single tenant in that building at one point regretted their purchase, so much so that they filed a civil suit against the developer. You know, I think that actually may still be going on, that lawsuit on 432 Park Avenue. I mean, you have people spending 10 plus million on an apartment. Some of the most expensive apartments in there under $100 million, and you have all electrical problems. The elevators don't work. You had a lot of crazy stuff going on there. They've since finished it, but well, I should say they've since fixed it. You know. Manuel says there's probably a lot of buy now, pay later, which is not a good sign for the economy. Tom Glass says too much news available focused on negative subjects, and that's what sells ads. Very true. Very true. Maybe you're right. I think I truly do believe, and it may be a little bit hokey, but I do honestly believe that what you consume, you become. I really do believe that. So, if you look at the most viewed financial articles and the most viewed financial videos, right, on CNBC and even YouTube, they're all the ones that have a negative or a bearish bias, because those are the ones that are the most interesting, right? Not only a negative or bearish bias, but ones that skew to the extremes of the spectrum, right? Those are the ones that are going to garner the most clicks. I forget who just typed that in the comment section, but that's what drives clicks, and clicks drive advertising, right? So are you going to click on an article, or are you going to click on a video that says the coming looming crash, the next 2008 times 10 coming now, prepare, right? That video is going to get hundreds and hundreds, if not millions of views. Or are you going to click on a video that says, GDP growth expected to grow 3% per annum? Of course not. Of course not. Or you're going to click on the video or the article that, secret stock that Warren Buffett bought that's expected to go up 1,000%. People are going to click on that nonsense. So I think I agree. That's why in the investing business, and even in just business and life, you kind of have to train yourself to be an innate contrarian, but not a contrarian for the sake of being a contrarian. You have to just have a level head and kind of try to think independently, which is very difficult. It's very, very difficult to do that. All right, everybody, here we have the Stephen Schwarzman building, the New York Public Library. Now, one of the viewers, I think it may have been Rick. Rick, if you're watching, I think this may have been you. Supposedly, those protesters vandalized the Stephen Schwarzman building, and it's going to cost, I think tens of thousands of dollars, if not hundreds of thousands of dollars, to fix all the vandalism. I guess in that case, you can't call them protesters, right? If they're vandalizing property. But it's like, if you want to make your political point, don't vandalize a library, okay, that the community uses. I think that's ridiculous. Go protest in front of Gracie Mansion or something, not the New York Public Library. These people are clowns. Anyway, guys, this is One Vanderbilt right in front of us here. Looks absolutely stunning, looks beautiful. And then you have the one and only Chrysler building. Looks great. I think there may have been a Rangers game on tonight. Actually, I know there was. There was a Rangers game at Madison Square Garden today. Yeah, Alfonso says peaceful but fire. Yeah, fiery but peaceful protest. Or something. That was like the best meme of 2020. God. Anyway. But yeah, I think that's a good discussion to have, right? And as an investor, particularly as for retail investors, it's good to take a lot of that content with a grain of salt and sort of do your own analysis, right? I actually have a thesis, and I may write about this in the next edition of our newsletter. But I really truly believe that the 2008 financial crisis gave investors PTSD, and rightfully so. Like, I'm not trying to, shame those investors and shame people, but I truly believe that the great financial crisis gave investors such post-traumatic stress disorder that they believe that every time the market has a correction, a 5 to 10% correction, it has to be the next 2008. It has to be the next global financial crisis where the world falls apart and it's Mad Max, okay? No, that is not how it works statistically. Those are like 1 in 30-year events, and markets run in cycles. About 70% of the time, right, if you just want to talk about the indice, the S&P 500, about 70% of the time the market is trending higher, right, with a random walk, with an upward drift. The other remainder of the time, the market is in a downtrend, and it's in a correction, or it's in a bear market. Now, bear market does not mean it's going to be the next 2008 cataclysmic event where everybody's going to, lose their money, lose their jobs, lose their livelihoods. Those are like, those are decade events, like 1 in 30 year events. So, I don't know. Do you guys agree or disagree with that take? I really do believe that since 2008 was so traumatic for people. I mean, people lost everything. People lost their livelihoods. People lost their homes. People lost everything. So I think that it's built up this sort of investor PTSD where they think that anytime the market has a little wobble or a shake, oh my God, it's the next 2008, everybody's going to lose their jobs. No. It doesn't have to be like that. So, all right, speaking of the New York Public Library, this is one of the new ones right here. Hey, Ken Brockton says, Tom, not saying it's PTSD, but credit card balances and delinquencies are trending up along with car repos. That is true. That is true. This past earnings season, we heard from some of the major banks, right? JP Morgan Chase, Bank of America, Citi, and the like, and they are large credit card issuers. And you are correct that delinquencies for consumer credit on a 30, 60, 90-day basis are trending towards pre-pandemic levels. Now, I actually wrote an article about this. If you type !news, NEWS, this was about 3 weeks ago. In the newsletter, I did a deep dive into all of the major banks' earnings reports. And I actually included some of the slides from the earnings deck, and to show you that those credit card delinquencies are trending back towards Q4 of 2019 levels, which is pre-pandemic, right? And you're also correct that consumer credit card balances have now reached an all-time record high, which is a concern for a few reasons, mainly because consumer credit is really the worst type of debt to have because it's very expensive. It's very, very expensive debt. So in an environment where the Federal Reserve has raised interest rates, well over 500 basis points, I'm assuming the average APY on a credit card is going to be over, what would you say? Probably over 20% at this point. So at a time when consumer credit balances are reaching all-time record highs, it's the most expensive time to carry that debt. So it's sort of like a double whammy. So that's definitely a trend we need to watch. Ken Brockton, I think you're 100% correct, 1,000% correct. Once again, if you want to read that article, if you scan the QR code on your screen, every other Thursday after the market closes, we send out our investor newsletter, our free financial newsletter called Behind the Street. Maybe we'll try to go into Bryant Park. But yeah, we cover financial markets, global markets, real estate, fixed income, everything. So if you want to be signed up to read that, we just sent the last issue out on Friday because obviously last Thursday was Thanksgiving. So we sent it out on Friday. So if you scan the QR code, you can read our latest publication or you could listen to it. I record the audio podcast version on every newsletter. So let me know what you guys think. All right, I'm debating on whether we should go into Bryant Park. We'll make a go at it. We might as well. Ooh, this is a nice Tesla Model X. Man, you know, the white colorway looks really good. What do you guys think? Thumbs up or thumbs down on the Model X? I say thumbs up. Hopefully Elon Musk will continue to drop the prices of the Model X. That's my hope. Hey, random YouTube viewers. Hey Tom, hope you're doing well. I hope you're doing well too. Hey, Danny Morris, what's up? Ed T, what's up, Ed? God bless. Does anybody know if Rangers won tonight? Everybody's walking around with Rangers jerseys. Oh, they lost? Hawaii says they lost? Damn. Hawaii, you went to a Rangers game, didn't you, when you were here? Did they win when you went to go see them? What was the score of the game? Wow, they lost 5-1. That sucks. I'm not a big hockey, fan, but I would absolutely 100% see a Rangers game. Hello Mate 2008. They played the Sabres. I don't even know what state the Sabres are from. All right, everybody, I gotta put you down on the garbage can again to plug in the phone. Buffalo Sabres, you're right. Full moon. All right, but actually we got to start headed downtown if we want to make the Hudson Yards tonight, because the inside of the shops at the Hudson Yards is absolutely gorgeous, and I haven't seen it yet this year, and I want to share that with you guys. Hey, look who it is. The Federal Reserve Chairman, Jerome Powell. Jerome, you want to give us a little bit of an insight on what you think you'll do at the next FOMC meeting coming up here in December? What are you thinking? You going to raise rates? You going to cut rates? What do we got? What do you think? Zachary says I'm not a big sports person, but I wouldn't consider myself a big sports person either. But, you know, if you're in a major city like New York, I mean, seeing a Rangers game is awesome. You know, in Madison Square Garden. I just think the environment would be really fun to do. David says they'll hold rates steady yet again. Possibly. Running at altitude says the 30-year fixed rate has dropped for the 4th consecutive week. Yeah, I mean, ever since we got that lower than expected CPI number, the 10-year U.S. Treasury yield dropped like a rock. And the 30-year fixed rate mortgage is most closely tied to the 10-year Treasury. Now, it's funny because, you know, at the beginning of the live stream, we were talking about how we got the new home sales data out, right? Not existing home sales, the new home sales data for October. And it came in well below analysts' expectations. But, you know, we do need to keep in consideration also where the 30-year fixed rate mortgage was in October. Now, October, we had that pretty nasty sell-off in the debt market, which we've covered here on the stream. And that sent, for a very, very brief time, that sent the 30-year fixed rate mortgage over 8%. And that was all through October. So, you know, it's not, I guess, unusual why, you know, existing home sales came in below expectations, came in a little bit light. But the good news is, you know, as we've sort of talked about and wrote about in the Behind the Street newsletter, is that interest rates, generally speaking, have an inverse correlation with valuations of real estate. So as interest rates go up in the cycle, valuations of real estate tend to go down, right? Just due to affordability and vice versa. But it doesn't happen right away, right? There's a significant lagged effect. And I wrote an article about last month, and it was titled In Order of Liquidity. Again, it was titled In Order of Liquidity. And as the Federal Reserve raises interest rates and transitions from quantitative easing to quantitative tightening, the most liquid assets, such as equities, stocks, right, whatever you want to call them, they tend to reprice the fastest to accommodate a higher rate environment. And that's why you saw, you know, a lot of the high beta, you know, tech stocks, the SaaS, the software as a service, a lot of the Cathie Wood, ARK innovative, you know, ETF growth stocks, they got hammered, or they got clocked in a big way, and they repriced very fast. Look at all this garbage. This is like a wall, a mountain of trash. So much garbage. But the good news is you're just starting to see rising interest rates impact valuations of shelter or of homes, right? Which is good news because rent is crazy and prices of homes are crazy, and they're finally coming down, which is good. Okay, 1333 Broadway, which is one of the greatest views of the Empire State Building in the city, right here. What do you guys think of this view of the Empire? I'll give it a 9.6 for sure, 9.6. right, let's continue to make our way down Broadway, and we will run right into Macy's Herald Square, where we'll check out the holiday display, and then we'll probably make a right on 34th Street and head all the way down to the Hudson Yards development, and we'll go inside the shops at the Hudson Yards for the first time. I think this will be the first time this holiday season we'll take the stream there, and I think those decorations are probably going to rival Saks Fifth Avenue, in my opinion. Hey, Rick Kelly is here. What's up? Zachary, did you see the parade live or in person? I saw it. I watched it on the streamers. There's two streamers in particular that I like that cover it very well. Safat of the New York City Walking Show. I usually watch his live stream from the comfort of my home, so I don't have to freeze, selfishly. And Action Kit. I usually watch the Macy's Thanksgiving Day Parade on those two streams. Oh, this is the Advent calendar we were talking about. A little bit of an update. I just bought an Advent calendar. Hey Carl, says your videos are always interesting and informative. Thank you for streaming. Thank you, Carl. Hopefully you had a good Thanksgiving Day, well, Thanksgiving weekend, extended weekend. Thank you for watching and supporting the channel. Hey Nina, what's up? Brad is like, I'm moving in 1 month. With the streams, are making me think I should put up some Christmas lights. Yeah. You don't have to go all out. You don't have to blow it out. All right, let's head to the Hudson Yards. Now, one of the other things I wanted to quickly talk about, and I brought this up at the very, very beginning of the live stream, and I also included it in this week's Behind the Street newsletter, and I think we should all be watching this. Oh, there's the monk people, the monk guys that do the monk scam in Times Square. Well, one of the things I think we should all be paying attention to is this decade-long consolidation in gold. Now, if you pull up your Bloomberg terminal or your TradingView or MarketSmith or anything else, one of the things you'll see is that gold topped in 2011. Now, gold topped in 2011. It was in a severe bear market all the way to 2015. And then it rallied all the way into August of 2020, right around $2,000 an ounce, right? Right around $2,000 an ounce. Now then from August of 2020 till today, right? Till today's date, which is almost December. It's been in a 3-year handle. So this is about a decades-long cup with handle here on gold. Today, gold broke back above $2,000 an ounce. I think we're trading at $2,015 on gold. I want you to, if you go back to the very beginning of the stream, I showed you guys the chart, or if you type !news, N-E-W-S, in the chat, you could scroll down to the bottom of the newsletter, and I included the chart. Look at the bull run in gold in the 70s, right? When we went off the gold standard, when the US went off the gold standard. Gold tends to trade like this. This is very, very reminiscent of gold, where it'll have these oh, they're taking down the turkey. That's a bummer. They're taking down Tom the turkey. We were here when they were putting it up. Anyone remember that stream? We were doing the behind the scenes Thanksgiving day when they were putting up the turkey. Anyway, sorry, my attention span is horrible, as you can see. But yeah, long story short, watch that, because if we get a breakout on big volume, I mean the measured move on this bull run in gold is significantly higher. Now, it may just chop around in its handle for a couple more years, I don't know, but a risk reward, right? If you're an investor, if you're a trend trader, right? Think about like a Paul Tudor Jones, Stanley Druckenmiller. Those are like intermediate term size trend traders, position size traders, kind of like William J. O'Neill. Right, God rest his soul. He unfortunately passed away this year. But I mean, the risk reward for risk-adjusted returns, that's not a bad setup. And it's looking like a lot of the geopolitical, and I don't want to get too political on the stream. I know like subjects are very, very touchy, but there's a lot of geopolitical risk out there, and I think that's why you're seeing crowding into gold and into digital gold as well, Bitcoin. I mean, think about how the instability around the world, right? Think about inflation around the world. You know, us Americans, we complain that we have 3.3% inflation in the U.S. I mean, take a look at some of the other countries around the world. I bring up Argentina as an example because Argentina just elected a new president who was actually in New York City, I think, today. Is that right, everybody? I think the new president-elect of Argentina was in Brooklyn, New York today. I thought I saw that somewhere, but you know, Argentina is dealing with 100% plus inflation. You also have this dichotomy going on in China with wealthy, extremely ultra high net worth Chinese individuals trying to get their money out of mainland China. And one of the ways that they can do that is Bitcoin and gold. So those are just two trends I wanted to bring up just so we could watch. But I don't know. I mean, what do you guys make of this move in gold? Is anybody bullish gold? Anybody bearish? It's just the chart stands out to me in a big way. It kind of actually looks like the Japanese stock market a little bit. You know, Japanese equities topped in the 80s, right, 1980. And we have not hit an all-time record high in the Japanese stock market since. I mean, think about how crazy that is. Wendy England says no gold. Al Baker says the SEC hates crypto. You're right. You are correct. Gary Gensler is not a big fan. Let's just say that. That's a big understatement. Chinook Wins is here. What's up? Jerome Powell says if you believe in private ownership, Bitcoin is mandatory to have in this digital driven world. Amber Vid says correction 140% is the Josh S says gold is heavily manipulated. That's true. That's true. Now, we'll say allegedly. We're gonna cross by 1 Penn, and then we'll head to the Hudson Yards. But look at how gorgeous this shot of the Empire State Building looks here. Anyway, if you guys are enjoying the live stream so far tonight, feel free to click the like button and subscribe to the channel if you are new. We go live every night at 8:30. So if you enjoy these walk around New York City, talking about the markets, having a chat, feel free to subscribe. It's always a fun time here with the team in New York and Miami. But somebody said that the SEC hates crypto in general. And yes, I agree. We also had another chatter or a commenter that said gold is heavily manipulated. That is also true. But I would like to extend that statement to the whole precious metals market for the following reason. Now, this isn't a conspiracy. This is, verifiable. You could look this up even in court records. Major investment banks, JP Morgan Chase, and even BNP Paribas, the French investment bank, has really been one of the main, I should say, banks that have been allegedly, I'll just say for the sake of just doing this stream live in front of 900 people or whatever, I'll say allegedly, but they can manipulate the metals market through the paper, right, through the paper derivative. It's called spoofing. And they've had to pay billions of dollars worth of fines for spoofing the metals market. I don't know if I'll have enough time to explain that all tonight on the stream. We only have about 15 minutes left, but maybe I'll write up a little article about how exactly they do that. But it's essentially the cost of doing business, right? If you can, make, billions of dollars for the bank trading these commodities by moving around and manipulating the metals market, and if you have to pay, $100 million fine, it's just the cost of doing business. But they can manipulate it through the paper derivative, right? So if you, look up ticker symbol SLV or GLD, these are just like paper. It's called the paper. You're trading the paper. You're not trading the physical asset. So yes, that is true. Banks have had to pay crazy fines for manipulating the metals market. This is the Moynihan train hall down here. But we'll cross by the New Yorker Hotel. Now, does anybody remember when we were talking about 5 East 59th Street at the beginning of the live stream, how I said that's went into foreclosure and it's being sold at auction? Well, here's another one for you. This building right here, right across the street from the New Yorker Hotel, this building, I think, just sold at auction for 15 million bucks. It's like pennies. It's like pennies on the dollar. And I think it cost about 90 million to develop that. So, there's a lot of hardship going on in the commercial real estate market here in the city. And it's not just exclusive to New York. It's, across a lot of major cities, particularly San Francisco. Yeah, it's windy. I'll plug back in the microphone because I think my phone is charged. So let me, I'll put you guys down inside. We'll plug back in the microphone because if we're going to go to the Hudson Yards tonight, the microphone is mandatory because it's going to be a big wind tunnel. Da 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 da. All right, what do you think? Madison Square Garden, Empire State Building. What do you guys think? Good view? Thumbs up, thumbs down? I'll give this a 9.7 just because it's so iconic with Madison Square Garden off to your right. This is like the classic New York picture right here. All right, I'll put you down just so I can plug in the microphone. Whoops. Do with the microphone, guys. All right, here we go. Okay, can you guys hear me? Audio check. We're good? Thumbs up, thumbs down? Oops. Can you guys hear me? We're good? Okay, good, cool. Yeah, sometimes we have some issues with the mic. All right, let's head out and we'll check out the Hudson Yards. Hey, Sandra, what's up? Sandra from Canada is joining us. Andrew Lee. What's up, Andrew? All right, we'll bang a left here and go to Hudson Yards. Troy Atman says, Tom, can people study there at night? I think probably the security guards will kick you out of there, but we were actually in the post office. So this whole big building here that you see off to your left used to be a post office. Now, the front of the building still is. The rest of the building was converted into the Moynihan Train Hall, where you can get the Long Island Railroad, which is absolutely beautiful in there, by the way. The problem is there's no internet connection in there. So every time I try to take you guys on a tour inside the Moynihan Train Hall, unfortunately, we can't. Fortunately, we can't. But this is where we're headed, towards all of these massive, brand new Class A office towers. Now imagine being super high up in one of those buildings and having this be your view. Quite literally an unobstructed view of the Empire State Building, which is phenomenal. Hey, someone says, I was working at Chase Bank. Ah, cool. Nice. You'll notice the city starts to get a lot cleaner over here too, particularly as you cross 9th. This is B&H Photo to the right. That's where I bought this microphone, actually. The microphone that we're using right now, I bought right there. All right, we have made it. Here we are. This is one of the main entrances to the Hudson Yards. Now, a lot of these buildings are vacant too. You can see all of these empty and vacant floors. But there's also a lot of businesses moving in here. We're seeing something very interesting happen. You're seeing a lot of corporations downsize to smaller amounts of square footage, but you're seeing them go to nicer office buildings, right? So everybody is sort of moving away from the older office towers in Manhattan, the Class B and Class C, very, very old office towers, and they're moving into beautiful new office space like this, but at significantly less square footage. So you can see EY is here now. So EY has vacated 5 Times Square. I think we were talking about that last a couple weeks ago on the stream. I love the high ceiling heights in the lobby though. Looks stunning. Yeah, so it's an interesting dichotomy. You're seeing companies sign leases in more expensive buildings, but they're taking less square footage. This is the Peloton. Anybody have Peloton here? They're publicly traded, PTON. Oasis and BlackRock over here. Yeah, so they are across the street. We're about to see them in a minute. Here you have the Whole Foods, but we are going to make a right here, and then we're going to make another left. We'll make a right, and then we'll make another left. Now, there was maximum security at the BlackRock offices last week because the protesters were causing a ruckus outside of BlackRock. Hey, Dan Sang, what's up? Good to see you, Dan. We were talking about new home sales today and gold. All right, just a little bit further, and we are going to head inside the shops at the Hudson Yards. Now, this building to our left, there's Amazon and JP Morgan Chase. And then if you make a right on 10th Avenue and you go up 2 blocks, that is now the headquarters of BlackRock. Oh, I think we got the light too. So we're going to cross 10th Avenue, and then we are going to go inside the shops. This place is amazing. It's decorated very nicely for the holidays. And it'll be nice to get out of the cold finally. Oh. They always have it very nicely decorated in here. Okay, welcome to the shops at Hudson Yards. They keep this place incredibly clean. It's really amazing here. Yeah, Cat Bravos is, speaking of gold, amazing, right? Every year they make it really nice in here. And this isn't even the best part. We're gonna make it right here. And I mean, I think you guys are gonna be blown away. Hey, Jonathan from Florida, what's up? Isn't that incredible? Look at that. They have the lights spanning 3 floors in here. All right, this is the most impressive part right here. Let me know what you think in the chat. This is the first time of 2023 we are seeing the Hudson Yards holiday display. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We usually do these live streams every day starting at 8:30. Oh, I know. Yeah, Hawaii's like if you go up a little bit more, you can see the vessel. Hey, Madison 32. Good to see you. All right, so we're going to exit to the left, and that means we will come out right in front of the vessel, which I think is also decorated for the holidays. Wow, look at that. We'll have to put our hood back up because it's probably gonna be windy. All right, what'd you guys think? What'd you think of the inside of the shops at the Hudson Yards? This is the vessel. And then you have the 5 Hudson Yards in the distance, which is also the Equinox Hotel. This building right here. Yeah, they always do a good job with the Hudson Yards for Christmas. Now, I filmed a really amazing New York City penthouse tour that I think you guys will enjoy. Now, I may take over the listing, we may not. I'll let you know if we do. But the address is 75 First Avenue, Penthouse 8A. The place is amazing. It has 3 bedrooms, 3 bathrooms, 1,700 square feet of interior space and 1,100 square feet of exterior space. You have unobstructed views of all of Midtown Manhattan. You could see One Vanderbilt, the Empire State Building, all of the Hudson Yards, all of Billionaire's Row. And I sent that out on Friday to everybody. So check your email. But if you want to see it and you want to see that behind the scenes look at the penthouse, 75 First Avenue, just type !news, NEWS in the chat, or you could scan the QR code on your screen. And I send out a free financial newsletter to everybody that's a subscriber to Walks on Wall Street. So we talk about not only the financial markets, but New York City real estate from a perspective of somebody who sells some of the most luxurious real estate anywhere in the world. So if you're interested in receiving that, go ahead and scan the QR code on your screen. And let me know what you think of the penthouse at 75 First Avenue. But that is going to be all for tonight, folks. I want to thank you all for coming out and enjoying Walks on Wall Street. We had a pretty good conversation about home sales tonight. We also talked about gold, commodities. We had a good conversation. If you want to enjoy the conversation tomorrow, go ahead and subscribe to the channel. And we will see you all right back here live from New York City starting at 8:30. So if you enjoyed it, feel free to leave a like on the video. Once again, subscribe to the channel if you are new. And if you want to receive all of our equity research for free, all of the fun stuff we talk about on the channel live, I package that into a research piece that I email everybody every other Thursday after the market closes. Once again, go ahead, scan the QR code on your screen, punch in your email, or type !NEWS, and then you will receive it. So everybody, thank you so much for joining. Andre, Fascinating, Tatted Tara, Arctic Trend, appreciate you. Next, NMB 045, Colton Manning, Bree Grams, Hawaii 222 Ant, LA 007, Girl with Wealth, Bree Grams, Optimus 17, Jonathan, Sabrina Fair, appreciate you. Crypto Meme, remember there's always a bull market somewhere, you just need to know where to look. Shannon, Gary Carpenter, Cat Bravo, Sally, Zachary. Guys, we'll see you tomorrow. right here, bright and early, 8:30, Walks on Wall Street. Take care. God bless you all. God bless the United States of America. Thanks.